Good morning. In this presentation, we are going to see how we can trade in MCX natural gas today. Before looking into that, let us see what happened yesterday and what we expected yesterday. You can see this red color candlestick that indicates yesterday's price opening, and now we are following 1 hour chart. What we expected yesterday was that we expected that natural gas has got the potential to stay in downtrend. We know that the price closed below 216 on the previous day, and also it was staying below the average, and yesterday's price closing was below the previous day's price closing, and slowly and steadily natural gas was coming down. That made us to take a decision that the price has got the potential to stay in downtrend, but we want to follow this 216 very carefully. And also we had natural gas inventory report yesterday. Now let us see what happened after the price opening. After the price opening, you can see the price came down till 214.20, which that means that it has created a new low. We know that on the previous day the price created low of 214.6 around the zone, and from the price opening you can see the market had created a new low, but it didn't come down below that. So the price steadily it was moving down, going to test this 216 again, and it found a resistance. That gives us an indication that the price is not very strong downside, but still it was staying down. Now you can see before the inventory report we had the price broke 216 and it went up and tested the average. We know that on the previous day the price struggled to clear the zone, but yesterday the price was quite comfortable in clearing the zone with the help of our great Indian rupee factor. So what happened after the report? This single candlestick which you are seeing, this is what happened during the inventory report. So from there the report was bit positive for the sellers, so the price came down till 213, which again means it has created a new low. But you can see, if you go back and see this price action, what happened here on 26, whenever I place the cursor on any candlestick, you can see the date and time below. Once the price reached this 213, it gave a clear bounce back. That is what we had seen on 26th. The same thing happened, like what happened on the yesterday. The price took some resistance around 217, it closed lower. The next day the price opening itself was around 214, near 214, and then it gave a bounce back. Once it reached the zone, again it gave a clear pullback, and we had faced this experience also. So we know some past price action. So in the same fashion, after reaching 213, it gave a bounce back, but it found some resistance within the zone of 217.2, where it found a resistance earlier. We know the price found a resistance here and also here, and it was also supported by the average. In this case the average was staying below the price action, but the case is not the same way. Here the price is the average is staying above the price. So it found a resistance and it came down and closed below 216, which shows that the opening and closing is more or less equal, and also the price closed near the previous day's price closing. So apart from this inventory report and these 2-3 candlestick which indicates that there is some buying, apart from this you can see whenever the price comes down it gave a pullback, and we had a pullback and everything we had it, but the price closing, it came down below 216. That is a positive sign for the sellers. So we can come to, on seeing this price action, yesterday's price action, a very confused price action, we found buying and also we found selling. Only the closing made the difference for the sellers. Now let us go back and see what happened in the international market. Since we are following the international price also, just for a reference, we are saying that the same 1 hour chart we are following in international price. As a continuous follower of our presentation, you may know that this was the zone we had marked at 3.92 and 3.96. This was the zone we had marked, and the key deciding zone. If the price stays above, if it breaks above 3.96, then the possibility of natural gas reversing its trend is bright. So this is the price action we had yesterday. You can see the date and time the date and time below. You can see this long candlestick, straight candlestick, that indicates yesterday's inventory report price action, which shows that the price reached 3.96 and exactly found a resistance and came down, and around 3.92 this was the zone where we found our closing, where the MCX closed, which indicates that the price closed around 215 point something, 0.5, around that zone the price closed. But this is a 24 hours market, so after our price closing, the next candlestick the price went up and it is staying near 3.96. So why we are following this international prices? For the simple reason that you can notice that the price is again testing the key resistance zone. If the price was successful in staying or breaking this 3.96, then the sellers will be in great danger. So the market has got all the potential. If it breaks 3.96, it is going to be the danger sign. So that was the reason why we are following this international prices also. Now let us go back and see what does that mean. Since the price closed around 215.5, and now since we saw that the international price went up after our MCX price closing, which indicates that we have a better chance that today we can expect natural gas to open somewhere around 217 to 18, and it may be subjected to changes based upon where the rupee is going to open and stay. So comparing the NYMEX price alone, we can say this is the zone where you can expect the natural gas to open, which means that the price is going to open above the yesterday's price closing, above the 2 days price closing, and also it is going to open above the third. You can see on third the price opened somewhere around 217. It is going to open just above that. So which clearly indicates that 216, just follow it very carefully. Still we know that this is a very tough zone because the price was consolidating from for a long time, from March 18th. Hopefully from that day till today you are seeing the same price action, price every day taking its hits in and around 216. But we had learned from our past that whenever the price consolidates, one thing surely will happen, that is, you will, whenever the price breakout or breakdown, you will see a huge price action. We had witnessed that in crude oil 2 weeks before, where the price consolidated for 2-3 weeks and we had a very huge price action, and every commodity we had seen this. So stay with the principle, stick to the key support and resistance zone 216, just follow it and let us see what's going to happen during the trading session. So today let us you should what are the things you should follow just on international prices, just to see that where the price is going to stay. If it is going to break 3.96, this is going to be the key zone. Again 3.96, 3.92, watch it very carefully, both the sides, whatever the side wherever the price goes, the natural gas has got a potential to give you a breakout or breakdown. So follow the price action very carefully and let us see what's going to happen during the trading session. Thanks a lot for watching our videos. Happy trading. Take care. Bye.